Today, gold is breaking out following the recent announcement that the US credit rating got downgraded by Moody's. And this is especially concerning considering US yields are actually going higher. And in this video, I want to talk about the bull case for gold in all of this national debt concern that we're seeing, all while Trump's big, beautiful bill passes House Budget Committee votes. We'll see where all this lands us as things are quite dramatic across the market at this moment. In other news, Tesla CEO Elon Musk is committing to leading the company for the next 5 years. Some people had wondered if he was eventually going to leave Tesla, as he's kind of been missing in action with the whole Doge activity that he's taken up in recent years. And this morning we got CPI out of Canada, which actually came in higher than expected at 1.7% year over year, but still shows the overall trend of countries around the world seeing mostly disinflation. And by the way, this cooling inflation figure also is good for gold across the board, as we see many countries seeing their inflation numbers come down. Why might that be bullish for gold, you ask? Well, again, if central banks around the world, not just the United States, are all cutting interest rates, it can be a bullish catalyst for gold. And when we take a look at the daily chart, we see an interesting story forming when we take a look at price action. In recent videos, we've talked about how this trend line is getting respected on the daily chart, with a retest of this 31.25 area of past resistance turned support, marking a short-term bottom, and now seeing a bit of a breakout at a 4-hour chart level of resistance that we've been discussing on the channel. Take a look at how this 32.25 level for gold has very consistently held, both from a bullish perspective over here, then as a bearish perspective over here. But today, we're seeing what looks to be the start of a potential break back into an upward move for gold. And a positive signal to go with this is that silver is also following suit. In recent times, silver has drastically underperformed gold. What you're looking at now is the gold versus silver ratio. And when we look at this chart, you can see that it's been trending higher, suggesting that gold has outperformed silver. Throughout history, when you get very bullish metal market moves, you typically see the gold-silver ratio actually move lower, as silver should outperform in a really strong metals market boom. However, in recent months, we have not really seen that to be the case. In fact, the opposite is true. If we see a big break to the downside in this chart, perhaps that is a good confirmation signal that metals can really run hot to the upside. And if you're someone who really likes tracking the price of gold and learning more about it, make sure to join our free Telegram channel. We just hit 40,000 subscribers, and we're doing regular commentary on gold, indices, and of course, Forex as well. It's completely free to join this Telegram channel. We share charts each and every day, breaking down what's going on in markets, and the link is in the description down below. In other news, we can keep an eye on the indices here today, which are a little bit wobbly on the day, down slightly, but really, they've had such a good run. It is, in my opinion, likely that there will be some cooling off to do in the indices. We've had a good CPI print, we've seen trade war negotiations cool a little bit, and all of that, I think, has really contributed to what I think is a new move higher for the indices. I do think we are probably headed back to those all-time highs and beyond, but I'm personally waiting to see if we can get some pullbacks to add anything there. I'm not looking to chase this thing or go long here because I think we are a bit stretched in the short run. Same thing for the S&P 500. I'd be looking for pullbacks at the very least back down to 5790 and 5700, or even a more attractive level like 5500. Drawing a Fibonacci retracement from the lows to this recent high, the 38.2% retracement looks especially attractive, as this would give bulls a little bit of a break before reloading and potentially shooting past those all-time highs. If we get this move, I will probably be a buyer. Back to metals for a second, however. When it comes to gold and silver, I'm still very neutral on these charts. For example, take a look at the breakdown here on our gold and silver scanner, and what you'll see is that when selecting for gold, many of our indicators are pretty mixed here. And when we focus for a second on the US economic heat map, what you'll see here is a pretty mixed reading, which is why I'm neutral on both the dollar and gold at this time. GDP growth has come in slower than expected, which is a bearish catalyst for the US dollar, which should be bullish for gold. But then you also have things like manufacturing PMIs and services PMIs, which are forward-looking indicators of the economy that are actually showing some strength. So that would be bullish for the dollar and bearish for gold. The point is, when we go through all of our different metrics here, there's a very mixed painted picture for gold and for the dollar. So while gold from a technical perspective looks pretty promising, and we very well could see a retest of those highs, I personally don't have enough of a convicted reason in order to take a trade. And regular viewers will know that I mix a combination of fundamental analysis for directional bias, technical analysis for timing, and sentiment analysis for understanding peak risk to reward opportunities in the market. And when I don't have these three things aligned, it means there's going to be no trade for me. And I automate this process using software that scans all of the data automatically, generating bullish and bearish readings on my favorite charts. If you'd like to try out the EdgeFinder, head over to a1trading.com where you can request a trial, or use the link in the description below. Take a look at the Volatility Index, which has pretty much dried up from that craziness that we saw back in April. What I wanted to actually bring up with this chart is that I do think volatility is actually a little oversold. And what I mean specifically by that is that we went from everyone completely panicking to freaking out to now being well below all of our moving averages, including the 200-day moving average. This is showing you that now we are actually on a 200-day relative look-back basis. In terms of volatility, we're seeing now very low levels of relative volatility. And by the way, this is relevant to all traders, whether you trade currencies, commodities, indices, etc. When the VIX is very high, you'll notice most charts are moving crazy. And when the VIX is very low, the charts are moving very slowly. And you can see it very clearly in the NASDAQ. This is where volatility was high, where charts were moving very quickly. And then now you can see very low volatility. We're seeing very small movements on a relative basis. The same thing could even be seen in the US dollar, where you had high volatility. The market was moving like crazy on the dollar index, and now we've really entered into a much quieter period. Speaking of the dollar index, as I mentioned with our economic heat map, things look a little mixed here for me at this time. And to add in confusion, if we get trade deals, the dollar likely moves up. And if we get trade deals worsening or relations worsening, the dollar could move lower. There's a lot of unknowns, and I'm waiting for a little bit more clear of a picture on the economic data before trading the dollar again at this time. Another chart that I'm watching is oil. I've been watching this one for a couple days. I'm looking for a breakout here if we can get it, any sort of pullback into this 64 area of support, and I'm looking to go long from there. There's a number of reasons why I think that this could actually be a really promising trade. And the first and easiest one is that a lot of economic data globally has actually been surprising to the upside. And when I mention surprising to the upside, I actually have a chart for that. Of course, you know I've got a chart for that. I'm the EdgeFinder guy. I've always got a chart to show you guys. So the economic surprise meter is just a cool indicator that basically shows you on a relative basis all of our economic heat maps in a kind of singular view. So what we can see here is that scores like 71% for GBP or 60% for AUD, 63% for CAD, 88% for New Zealand. All this is showing you is these are economies where the economic data is suggesting strength for their currency as opposed to weakness or underperforming expectations. And what you'll notice here is that of our major currencies, which is of course these first two rows, there is actually a majority of countries, 1, 2, 3, 4, 5, that are actually showing above a 50% reading. There's one that is at 50%, and there is just 2 that are underperforming expectations, the US and Japan. So this is showing you that economic strength is actually doing decently well across our major currencies. Another way to read this is that some of the strongest currencies right now in terms of economic outperformance relative to expectations would be the British pound and the New Zealand dollar. And with this logic, it would make sense as to why I am currently long NZD JPY, with New Zealand getting a strong reading versus Japan's weak reading. By the way, I share every trade I'm taking inside of our Discord server. If that's something that you're interested in getting access to, click the first link in the description to chat with our support team about getting a membership with us. With the signals, you get Forex trades, commodities trades, index trades, my journal, ETF trades, stock trades, and a whole bunch more stuff. You also get access to our chat room, and we do have Alan Perez joining the staff as well. So the membership group is getting better and better. So if you're interested in a membership with us, come trade alongside myself and the rest of the A1 trading team. Use the first link in the description to chat with us. I'm still interested in Bitcoin longs, but trying to wait patiently to see if we can get a bigger pullback on this chart. I know that's a ways away, but that would really be where I am most interested in potentially taking a long stab on Bitcoin. Taking a look at the euro, we are retesting an area of past support, now turned resistance. In terms of a bias, I don't really have a strong one on euro US dollar or any of the major US dollar crosses at this time. The only ones that are close are the dollar yen, which is getting a +4 neutral reading. Remember that 5 or greater on the EdgeFinder is a bullish reading, or -5 and lower is a bearish reading. So Australian dollar against the US dollar getting a bearish reading, but everything else is pretty much neutral for currencies. Price action wise, the pound dollar does look pretty strong. Dollar yen is kind of fading away here. It looked like it was breaking out. I did get long around this area. So I'm going to watch this one. If it does retest the lows, I might actually dollar cost average a little bit more into my position there. Dollar Swiss franc respecting this 50% retracement zone. And the Australian dollar, which is getting a bearish reading, I'd be looking for at least a failure of support and then possibly looking for short setups. And then looking at yen pairs, we have pound yen, which is rejecting this area, but I do think is on a bigger term potential retest move back to these previous highs. I remain pretty bearish on the Japanese yen. In fact, pound yen is getting a bullish reading, suggesting that the pound should actually strengthen against the Japanese yen. So I'm going to watch this one for a possible setup, and I may take that trade inside of the VIP group today. By the way, if you're interested in getting access to the EdgeFinder completely for free, we do have a relationship with the popular brokerage 8cap, and they've actually offered to essentially give you a free copy of the EdgeFinder. They basically pay for it if you meet certain deposit criteria. If you'd like some information on this, head over to a1trading.com/8cap. That's a1trading.com/8cap. We'll also link in the description down below for you to find more information about this special offer that they are offering my subscribers. The basic idea is that you create an account with ACAP using our specific link in the description down below. You sign up, you get all situated, and then you make a deposit of the minimum criteria listed on that page that I just mentioned, a1trading.com/8cap, and then you go from there. All the instructions can be found on that page. So first question is from Clayton. They've been trading for 1 to 3 years. Primary goal right now is to become a funded trader. They own some of our stuff. Awesome. Thank you for your support. Let's see. Hey, Nick, I'm a big fan of the channel. My question is, how do you decide how much of your portfolio you're going to risk per trade? Do you tend to risk more on certain assets, or do you strictly adjust your risk according to EdgeFinder score? By the way, you should consider doing a fan meetup someday. I think you and A1 team would attract a massive crowd and provide great value. We have done some in-person meetings. If you're ever, or if you're near Atlanta, we actually did one pretty recently. At the Mercedes-Benz Owanda sponsored event, or they were putting on an event. We attended. It was awesome. There was probably 35, 40 people there, I think. Maybe a couple more than that, but it wasn't a huge group. It was mostly for like Owanda clients, and it was awesome. We had a great time. In fact, like I said, we met Alan there, who is now sharing his analysis within the Telegram channel. So those things are great opportunities to meet other traders, to meet a trading friend. I love doing those things. I would do them once a month if I could. So anyways, to answer your question, in terms of how much do you risk per trade? So I do have what is called a dynamic risk strategy. And that's a glorified way of saying I don't trade the same exact size on every position. I trade based on a couple things. There's a couple factors, and I do think risk management it can get complicated pretty quick if you use a dynamic risk size. So let me give you my overall way of doing it. So I consult with the EdgeFinder score, right? So EdgeFinder score plays a heavy role. If it's a stronger score and things look really good fundamentally, sentiment and technical wise, I'll probably put on a little bit more on the trade. Not a lot, not a huge amount. I'm not going to go broke taking giant trades. Still a small trade, but bigger than tiny. And if it's still a good score, but not a perfect one, I might take a smaller size, right? So that's part of the dynamic risk. But what also plays a role is because I'm on a margin brokerage account, margin stock brokerage account specifically. First of all, I don't like to use very much margin. I mostly treat it like a cash account, if you're familiar with that phrase. But essentially, depending on how much available margin I have in the account, that does also play a role. If I'm like very full of positions, my next position, if adding another one, is going to be really small. Like just even if it's a good score, like I don't like to go into heavy margin territory ever. So it depends on the margin available in my account, the EdgeFinder score, the quality setup, and also I may choose to reduce size a little bit further if we're in an environment in which the VIX is very high, right? So if the VIX is really high and we're getting huge moves every day, I may also choose to scale down my size further. So I would say those are the three to four components that really help to determine sizing on my position. So this is a component of my trading that is not 100% purely mechanical either, right? So I don't have like a specific hardcore algorithmic way of sizing my trades. it is a bit of intuition and experience. However, the risk range, right, could go from 0.1% of the portfolio risked to 3% if it's a trade I really like, but rarely would it ever go beyond that. So there is a wide range of risk that I can take on positions. There's a bit of discretion that comes into it. There's a bit of intuition and experience that I've done this for almost a decade. There is some level of that goes into sizing the trades, but I consult each of these components when taking a position. I have like a checklist, right? A mental checklist. What's the EdgeFinder score? How much margin do I have in the account? What's the market environment? Are we in a really high VIX territory? Right? All of those things are important. So something to think about. So hopefully that helps to answer the question. I know it was kind of a long answer. Next question is from Bashy. They've been trading for less than 1 year. Can we get a shout out for OT? It's his birthday today and he's spending it with us. OT, man, shout out. Happy birthday. Thank you for being here on your birthday. I mean, I don't know where else you'd be. This is the best place to hang. So we're glad that you're here. Happy birthday. And maybe we get some happy birthdays in the chat for our friend OT. Thanks for being here, man. Okay. Next one is from Nick. Fellow Nick, hello. Primary goal right now is to find a profitable strategy. Can you make a YouTube video on how to properly draw support and resistance zone across all time frames? Thanks. I actually have made a couple of these videos. Search up on YouTube. Just try searching up Trader Nick support and resistance, and you should find some videos on that subject. I think I've done 1 or 2 of those in the past. I know I have. I'm trying to make sure that that title will come up with your search, but I think it should. Next question is from Matt. They've been trading for less than 1 year. Primary goal right now is to find a profitable trading strategy. Is it normal to pay interest each month on Forex margin used, and how do I find this data? Yeah, so this is going to be provided with your brokerage. And if you're trading on an FX/CFD brokerage, CFDs usually carry higher amounts of overnight cost to holding positions. CFDs offer you more leverage. It is essentially like borrowing money. And so there's overnight fees. So the primary FX broker that I use, well, I trade FX in a couple different ways. I trade it through a currency exchange brokerage, but I also trade it just through stock ETFs if I want to hold something longer term too. But anyways, the brokerage that I offer, I can search up on their site and find like holding fees or financing fees. You can also find that in MetaTrader itself. If you use MetaTrader, you can right click the symbol in the navigator window or whatever it is, the window, right click it, click specifications, scroll down, and you can find like overnight or swaps or carry. Those are the words that you're looking for. Interest, margin, things like that. And then look for the overnight rate. Hopefully that helps. Let's see. Just going to check really quick. Next question is from Glenn. Glenn has been trading for 3+ years. They own some of our software. Thank you for supporting our work. What is your trading related question? They said, I've been trading for about 3 years, trying to get into options, and I've been watching some of your options content recently. How much equality, but I think you might mean equity, do I need to get into options? Yeah, so options, it depends what you're trying to do. But if you are doing what I would search up is if you're trading options in a similar way that I do, which is I like to sell options rather than buy them. Some people like to buy calls and puts and make bets on where the market's going to go. Certainly you can do that. And there are people who are very successful doing that. I actually prefer to use options to sell puts and calls. And if you're looking to do something similar, but you don't have a large trading capital base, what you can actually do is you can trade bull put spreads. You can trade iron condors. These are things that require less trading capital. So I would encourage you to look up those things. Look up selling credit spreads and look up, in fact, in my options video that I did, I have like a 30-minute video If Chandler or James, if you guys could grab this video for me, this would be awesome. So look up Trader Nick options on YouTube. There's a 30-minute video that I did. It's a options trading for beginners video. If we could get that linked in here, that would be amazing. In that video, there is a chapter in the timeline. There's a chapter, I believe, specifically on trading options with small accounts. Now, I'll tell you what, my options videos don't perform very well on YouTube. It's just not my audience. I love trading options and I will continue to trade them privately, just probably not going to make it my main, thing on YouTube. And that's okay. I've done some videos. That video, there is a topic within it. And I think Chandler or James, they're looking for the link. So give them just a second. I think they'll find it. If they don't, I'll look for it. But in that video, there is specifically a way to, here it is. Thank you guys. Appreciate you on that. This link. So if you're interested in options, bookmark that video or save it for later, or whatever is easiest for you. There's a part of the video specifically talking about trading options on a small account. Okay.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.